What if I told you some companies will literally pay you just for owning their stock? Not for working there, not for selling anything, not for doing anything at all, just owning a piece of the company. Sounds crazy, right? But it's real. It's called a dividend. Now here's the real question. Why would a company give away its own money? Let's break it down in the simplest way possible. Imagine you and two of your friends start a small pizza business. You sell pizzas all year. After paying for ingredients, workers, rent, and bills, you have profit left over. Now you have two choices. Option 1. Use that money to grow the business. Buy more ovens, open a second shop, run ads. Option 2. Split the extra money between the three of you. If you choose to split it, that payment is basically a dividend. That's exactly what companies do. When a company makes profit, it can either reinvest the money to grow or share some of it with shareholders, the people who own the stock. Now here's something important. Not all companies pay dividends, and the reason actually tells you a lot about the company. Big, stable companies often pay dividends. Why? Because they're already huge. They don't need every dollar to grow anymore. They're making steady profits. So instead of keeping all the money, they reward investors. It's like saying, "Thanks for believing in us. Here's your share." But there's another reason companies pay dividends. It attracts serious investors. Some investors don't just want stocks that go up and down. They want steady income. Dividends make a company look stable, reliable, trustworthy. It sends a strong message. We're profitable. We have cash. We're not struggling. Now let's flip it. Why don't some companies pay dividends? Because they're focused on growth. Instead of giving money to shareholders, they put it right back into the business. More products, more expansion, more innovation. They're trying to become bigger and more valuable. So instead of paying you now, they're trying to grow your investment for later. And this is where smart thinking comes in. There are two types of strategies: income now or growth later. Neither one is wrong. Some people love dividends because they create passive income. Others prefer growth companies because the stock price can increase more over time. The key is understanding what you own and why you own it. Dividends aren't free money. They're profit being shared. And when you start thinking like an owner instead of just a worker, that's when your mindset shifts. That's when you start building real wealth. So next time you hear the word dividend, you won't just hear a financial term. You'll understand the strategy behind it. And the real question becomes, do you want income now or growth later? That's the rise mentality.